So let's start off. Just talk to me casually about why did you guys decide to write the book?
Do we have to be casual?
Yes, you have to be casual.
We decided to write the book because money is so important. And the E-Myth is so important. So when you fuse the two, money and the E-Myth, to the people we speak to, the smallest of the small, and understand that's what our calling is, the smallest of the small, not the biggest of the small, not the best of the small, but the smallest of the small. When you understand how important money is to every single person on the planet, and you understand the E-Myth logic, you understand why the two had to be fused. It would be the first time that we've actually brought an intelligent system of capital and expansion to people who don't understand it. And now that we can, we're going to have a profound impact upon all the impact we've ever had to truly transform the state of small business worldwide. That's my answer. Let's have Fred give you his answer.
Yeah, my answer is that every small company really is at risk of making fatal decisions at any point. And just really by design, most small businesses do not have enough resources to hire a true CFO. We're not talking about your bookkeeper that you call your CFO just because you think the bank is going to be happy about that. And if you're not large enough to have a CFO, then by default, you as the business owner, you're it.
Right.
And you need to understand what that means. And so that really is what the book is trying to convey, wrapped in the E-Myth methodology.
Right.
And we intend to create and become the preeminent provider of economic development services worldwide. If that's not big enough, we'll try to find something bigger. And we intend to do that over the next 5 years. So every single one of you who are here listening to that outrageous statement that I've just made, and it is an outrageous statement, but it's no more outrageous than what Steve Jobs set out to do. When Steve Jobs created Apple in his garage, nobody would have believed it to be possible. Nobody would have believed it possible to create a $1 trillion valuation for the first time in the history of the world. Apple. Think about that.
Right. Let's take a step back.
Egg that's a 5 egg.
Let's take a step back because we're recording. Explain the E-Myth. What is the E-Myth for those
The
who don't
E-Myth
know?
is the entrepreneurial myth. And essentially says that people who go into business are thought to be entrepreneurs, but in fact they're not. What they are instead is what I call technicians suffering from an entrepreneurial seizure. So they create a job for themselves, and they have absolutely no understanding how to do anything else. They understand how to do the work that they know how to do, but they don't understand that there is so much more work that they don't know how to do that's critical if anything is to grow. And that's why 99% of all small businesses will fail in the first 10 years. Hear me, 99% of all small businesses will fail within 10 years. And the rest of them fail later.
Right, right. I think it's interesting that you guys started with CFOs. Why not with the CEO? What's the strategy behind starting with CFO first?
Because the CFO is so fundamental to every other C role in an organization. And it's the one that nobody understands. Asked a question of me, why is it that when we bring up the idea of managing your money, understanding the function called finance, small business owners are so resistant to it? You understand, every single one of them suffer from their absolute ignorance about money, how money works, why it works that way, and what one must do in order to relate to the way money works. I'm taking your thunder here, but effectively are terrified to learn more. Why? Because they're terrified of showing their ignorance. You understand, they're ignorant. And their accountant isn't teaching them anything other than how to keep score of the past and the present. But what Fred brings to bear on this is the prophecy about the future. Hear me. Fail in the future because you failed in the present, because you didn't even understand the past in relationship to the true subject of finance. So
Fred, talk more about that.
Yeah, the idea is that without financial information, you really have no objective way of measuring anything. Everything is subjective. Are my salespeople selling enough? Well, we don't know without that financial information. And the idea is also that the CFO is strategic, where a CPA or an accountant is compliance oriented. They're doing debits, credits. If it's a CPA, they may be doing some tax returns also, but that's all historical. That's like driving down the highway out here at 70 miles an hour looking out your back window. I mean, eventually you're going to hit something, and when you do, it's not going to be very pretty. So the idea is for the business owner to understand what it is to get that clarity. And the E-Myth is all about systems and how to implement those systems in every aspect of the business. But with regard to the CFO, it is about the financial information, not accounting data.
More strategy.
Absolutely.
Right.
And can I say something as to what Fred just said? Fred just said that the E-Myth is all about systems. And I'm going to take note that E-Myth is not all about systems.
Okay, you're not going to fight on that.
E-Myth is all about energy. You understand, a company rises or fails based upon the intelligent energy that's applied or not in the growth of that company. A company grows because it's energized to grow. We love to be able to say to our prospective small business clients, and understand, I say it again, the smallest of the small. The world is populated by the smallest of the small. We love to say, if you've got the will, we've got the way. Because we do. Because we have invented the system for growth. And it's step 1, step 2, step 3, etc., and so forth, all the way through step 8, the 8-fold path. And it's through that orchestration of that organization that we're capable of touching the imagination of our small business clients. And it's the imagination where the energy lives. Most people fail to understand that it was the imagination of Walt that created Disney. It was the imagination of Steve Jobs that created Apple. It's the imagination of every great entrepreneur that creates the life force that exists to push a company beyond what we know, constantly seeking what we don't. So rather than it being all about systems, it's essentially systemic, because without systems, there can be no growth. There can be no order. There can be no control. But without energy, the systems are futile.
Yeah, so it's the standardization of that energy across all aspects of the business.
Yep.
Right.
So if we were to have an obituary section in our business pages of businesses, of companies, and I've actually thought about doing
We've
this.
had many of them.
Right. What would be the leading cause of death? If you could, give an autopsy of these companies that are falling by the wayside.
Lack of energy.
I'd say lack of cash.
Like, okay.
You're done.
And I'd say that lack of cash is a reality because of lack of energy.
No doubt.
I'm saying without energy, I don't care how much cash a guy's got. He sucks big time. So the question becomes, how do you create the energy? To the degree I would select one most important element to move a company forward, it's to inspire the owner to go higher, than he's capable of doing, than she's capable of doing. To inspire the owner to go higher than she can aspire given his current knowledge and wisdom. Our job is constantly to inspire the people we work with. First, inspiration. Second, education. Third, training. Fourth, coaching. Fifth, mentoring. And finally, guidance through a process, an evolution we call the Eightfold Path.
Awesome.
Right. So it's about having clarity with that inspiration.
Without a doubt.
If you have inspiration and you're running in circles, that doesn't do you a whole lot of good, right?
You see, the two things that Fred and I agree upon. One,
There are only two.
yeah, no, hear me. When Fred speaks about passion, he speaks about thinking. His passion and his mind, thinking, are critical. When I speak about passion, I speak about feeling. So understand, I think, I feel. I think, I feel. I think, I feel. And until and unless those two components of a human being come together, there is no great abiding inspiration to drive us further. So I must think, and yet I must feel. And that intelligence becomes the driver of something we never imagined we could create. You know Steve Jobs didn't start Apple with an iPhone in mind. You know that. Didn't, couldn't, wouldn't, never. And when they fired Steve Jobs, because he sucked big time, nobody would have ever imagined that he was going to come back and save the frickin' company. Nobody could have imagined that. But think, feel was alive and well in that man. So that's why we're so necessary for each other. You understand? Mm-hmm. Because without that thinking that Fred speaks so highly of, and without that feeling, which I can't shut up about, there is no passion beyond the ordinary. And that's what's so critical.
Good. I know we're all excited to read the book, but before we leave, Fred, tell us a little bit about the Profit Beacon.
Oh, right. Yeah, the Profit Beacon actually is an automated chief financial officer. We have been working on financial models for 25 years. And the Profit Beacon really is the culmination of that effort in 100 different ways. And basically what we're able to do is take accounting data from QuickBooks and convert that into operational intelligence, which is clarity. Where are we going, and what does it look like when we get there? And we can do that. I've gone from zero, setting up a brand new user, to loading data and creating a 2-year monthly P&L and weekly cash flow forecast in 8 minutes. So it is a very sophisticated application. All of the high level sophisticated finance is done in the software. It does all of that work so that the business owner doesn't have to.
Wow.
And in Fred's terms, the Profit Beacon thinks for you. So understand, he's automated the process by which a chief financial officer prophesizes about the future. Something that has been impossible for anybody to do is now possible for everyone to do, but to do it at less than the cost of a minimum wage employee. Unheard of. Absolutely remarkable. And that's why I'm so jazzed about it.
Well, Michael, tell us a little bit about what's new on the horizon for the Gerber organization.
Well, the Gerber organization is about to do something. Well, we've been doing it for now since, Luz Delia, what day did we launch?
March 4th,
March 4th. What year?
2018.
Thank you, dear. I want you to stand up, please. So
We
I
see
can
who's the
introduce
boss
you to
here.
everybody here. Luz Delia is my wife, my partner, the Chief Executive Officer of Radical U and Michael E. Gerber Companies. And Luz Delia and I are about to transform the world. And when I say we intend to become the preeminent provider of economic development services worldwide, we've created a school unlike any other entrepreneurial school on the planet. And our school is a school that effectively teaches new entrepreneurs how to go from a company of one to a company of 1,000, step by step by step by step. The eightfold path is very, very simple, and I'd like to just share it with you briefly. The first step is called a dream. Martin Luther King said it, I have a dream. Anybody want to feel what it feels like to have a dream? Listen to what Martin Luther King said in Washington, D.C. And somebody said to him, tell him, Martin, tell him about your dream. And he told them, listen to it. I'm saying every entrepreneur must have a dream. The second is a vision. And the vision, while the dream is the great result, the vision tells you how the business is going to be formed in order to produce that great result. The third step is the purpose. And the purpose is the storyteller's aim. The entrepreneur is a dreamer, a thinker, a storyteller, and a leader. The leader has a mission. So the first 4 steps of every growing company is I have a dream, I have a vision, I have a purpose, I have a mission. And we help every single human being on the planet discover their dream, their vision, their purpose, their mission, to go to work on the company of one, to grow it to a company of 1,000 in 4 additional steps. The first is the job. The second is the practice. The third is the business. And the fourth is the enterprise. And I can tell you that story and story and story and story. I'm not going to bore you here, but I'm going to give you a gift. And it's called Making It on Your Own in America or wherever you happen to live. A riotous experience of radical self-employment. It's a gift from us to you. All you need to do is ask Liz Delia how to get it, and read it, and you'll understand Radical You completely. Thank you very much.
Thank you. We have time for questions. We're going to open it up for questions, and we have some runners.
Thank you.
Fred, how can a small businessman deal with what-if scenarios in regards to figuring out what their cash positions will be that might help save them?
Well, yeah, and I think that is really the key element to the CFO, because again, accountants are compliance oriented, CFOs are strategic beings. They're looking forward. The ability to quantify every decision, every action that a business owner is looking to take, or any market conditions that are changing, is absolutely critical, because you may be heading down a path without the proper clarity is going to lead you to that fatal outcome. You may have made a decision 6 months ago that is going to ultimately put you out of business if you don't understand what the result of that action really is. And primarily it's a cash flow question. A good example is if you have a $50,000 problem and you know about it 5 months ahead of time, that's a $10,000 problem per month. But if you run up on a $50,000 problem 30 days out, it's a $50,000 problem. It's
Let
about
me
clarity.
put it in a different way, as we're wont to do. Every decision every business owner makes is a financial decision. Every decision. It doesn't matter what it has to do with. Every decision is a financial decision. The only remarkable thing is nobody understands the meaning of it. And because and it's that drastic, nobody understands the meaning of that decision. Nobody understands how to make that decision. Nobody understands the implications of those decisions. And yet every single day, every single company is making financial choices without understanding, in fact, that they're doing just that. That's what Fred has created with this genius system. And that's why we're so committed to it.
Well, and let me just add to that. The idea that not only the business owner, but everyone in that organization is making decisions all day, every day. And so the cumulative effect of those thousands and thousands and thousands of decisions over time is going to define that company, good or bad. And we're not talking about really large decisions. Let me give you an example. If we take a company that has 25 employees, and each one of those 25 employees wastes something that is worth $1 every day. And if you do that math over the course of a year, it's about $6,250, I think. In an environment where it's okay to do that kind of thing, leave sandpaper on the floor or paint sitting out to be wasted, whatever that is. In an environment that allows those kinds of things to happen, you can easily multiply that dollar by 10. Now, if you do that, now we're talking about $62,000. Here's the real key. It's not really $62,000. What it is, let's say your profit margin is 5%. To replace that $1 per day per person with a 5% net profit margin will take over $1.3 million of revenue. So it's not a dollar problem, it's not a $6,000 problem, it's not even a $60,000 problem. It's a $1.3 million problem. And that is what clarity is all about. You need to understand what those kinds of decisions and circumstances are allowing to happen in your company. And that's really what the book, at least my chapters are. Michael's are different. But in my chapters, it is all about getting clarity and understanding every decision you make.
Fred,
We got a question back here.
can your software help my accountant to be a better accountant or a stronger accountant or more specifically engaged accountant?
Oh, absolutely. Yeah, if they are willing to get out of the debits and credits, because the accounting department, in reality, that's where financial information goes to die. Because you line things up in nice, neat columns, print a report, look at the top line, bottom line, put it away. If the accountant is willing to step out of that role and become more strategic, the software would be just a tremendous tool, because a lot of the detailed finance analysis is being done in the software. You do not have to be a CFO.
Fred, let me interject something and stop you.
Can I stop you?
Yeah, and stop you. Let me say that the young lady who just asked that question,
That's Judith Collins.
Judith, the only answer to that question is if you're willing to become the chief financial officer of your company. Your accountant will kill you if you're not. And hear me, your accountant will do that not maliciously. Your accountant will do that because your accountant was trained to do that. And so until you become the CFO of your company, take it on, whole hog plus the postage. Until you're willing to do that, your accountant will sustain you in a tactical life that will be the death of your business. You possess the power to grow, every single one of you. And the beauty of it is that Fred's software was built just for you, not for your accountant. You got it?
Excellent. Question? No?
Thomas.
So, I can't manage without having a budget. And yet I see the majority of very small businesses don't have a budget. Now, just talk about budgets and the importance of that, and does your software or your book or anything help those people understand and get to a budgeting philosophy?
Yes and no, and let me explain that. It gets us to a rolling forecast, a much more dynamic environment. Budgets, to me, are, unless you're changing them on a regular basis, which then makes it a rolling forecast, right? Budgets to most people, in my corporate experience, they're useful for about the first 60 days. And then we're so far out of line with that budget, then people just start winging it. Or you put together a budget, and I went through this 20 years ago. I traveled all over the country, talked to a whole bunch of people, spent a whole lot of money, put together a budget, sent it to corporate, and they said, no, we're cutting this, 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 and this, go do that. And that is just so demoralizing to the entire staff, it doesn't help. So yes, I mean, what the software specifically does is it analyzes the historical data, determines what's fixed, what's variable, what the relationships are, what the averages are, and then extrapolates all of that into a forecast. But next month, when we load new data, it's going to do that again. And it's going to recast those outcomes based on that new analysis. So yes, it is a budget in a sense, but it's really more dynamic.
How much historical data do you need to input into the system?
Well, we like to get, the question was how much historical data
What was
do
the
we need?
question?
The question again was how much past historical data do you really need to input into the system to really get data out of the profit beacon?
Well, it depends on how the company has been operating as to how much we need. Certainly, the more data we have, the better the analysis is going to be. So we normally, when we are setting up a new company, we load a couple of years worth of historical data. So if we were loading data today, we would go back at all of 16, 17, and then year to date 18. But here is the question. If the company's been operating pretty consistently for the last 2 or 3, 5 years, let's say, up and down maybe 5–10%, nothing dramatic, we want to use a longer time frame to do that analysis. But if something has changed in the last 3 months, maybe 6 months, have a new client, a new contract.
New accounting system?
Well, that really depends on what you're doing with your accounting, but that really shouldn't make a difference. What we're looking at is the changing dynamics in the company. Revenue going up or down, and are you bringing on people? Do you have a new manufacturing facility, for example? You had to buy 5 new vehicles, whatever those changes are. If it's dramatic enough where it is changing the operating dynamics in that company, then we want to use a shorter time frame. Because if we mix periods that are not consistent in the way the company was operating, you're not going to get good data. So it depends on those answers as to how the software would do that analysis. The good thing about it is the user only has to answer the question, what period of time do I want to use? And you can pick 3 months, 6 months, 12 months, and it'll do all the work from there.
All right. Any other questions? Got one back here.
Okay, on your mic. Do you have any magic formula? So I'm my own company. I'm my own company, and so I started back in 2016, and I always struggle with, when let's say you make $1,000 or order, how much do you put back in the company? How much do you put for marketing? And how much do you pay yourself? Any kind of magic bullet for that type of scenario?
It's a great question.
That is a great question, and unfortunately there's not a great answer.
I know. I think there was.
Yeah, it really, there are industry metrics that you can get. Depends on what you're looking at as to whether they're any help at all. If you're operating, I don't know, a distributor here in, let's just say a landscaping company here in Dallas, and you're comparing it to national data, it does you no good, because a landscaper here is completely different from a landscaper in Cleveland or California or the East Coast. It's just useless information. Now, if you can get down to more specific information, then there are some metrics that you probably could use. And in fact, we ran into a company a couple of weeks ago. We were at a conference in Washington, D.C., and they are able to drill down to specific geographic areas. It's BizMiner is the name of the company. And we're actually talking with them about integrating some of our applications with their applications and adding intelligence to our application today that we don't have. They may be able to help some, but unfortunately, what I look at is you really have to manage your ability to generate revenue. So if it requires you doing advertising or marketing in a particular way, you want to make sure you're getting the right return on those dollars. Apart from that, you just need to make sure that your operating structure is going to give you gross margin and net margin sufficient to either allow you to take distributions or to take the salary that you really want to take.
Let me give you the simple answer to your question. A magic bullet is what you shoot yourself with. Yeah. And all that Fred is speaking about is to understand the numbers.
Right.
Understand the numbers, but not understand the numbers last week, last month, but understand the numbers next week, next month, next year, 2 years from now, and to be engaged in that prophecy, to be able to see how truly remarkable it is to gain clarity about the future. Every single one of us die for that ability to understand the future. That's exactly what Fred is selling. He's selling you your future. And then you'll get the answer to those questions because it will make such perfect sense. It will tell you. You're not going to tell it. A budget is when we tell it. It's going to tell us what in fact is true. And it's going to shape the choices we make from time to time to time to time. One very simple example. Had a wonderful client for a number of years. The name of his company is Just Bats. And this lovely guy, just a lovely man. In fact, I was in St. Louis yesterday speaking, and a guy came up to me, and he said, I wanted to say hello for my client who runs Just Bats. Just Bats, he's the son of the mother and father who owned a sporting goods store. So they invited their son to join them in the business. And so all the son began to do was to ask questions about everything they were selling. Questions about this, questions about that, questions about this, questions about that. Constantly questions about what we're selling, to the point where he ultimately selected the one thing we're going to sell in our store called bats. Now hear me. The most profitable, most predictable, most vivid opportunity that they were not pursuing because they didn't understand the numbers. He did. He took that company from a retail store to online, and it's called Just Bats. And when I met him, he was doing about $12 million a year selling bats. That's all he does. He sells freaking bats. Understand this? But he would always do this at the end of every period and adjust what he was going to do next year by 2%. And I kept on asking him, what's this 2% shit? Excuse me. What's this 2%? Why 2%? He said, because that's what we do. So I said, well, what if it were 20%? He said, well, that's impossible. I said, how do you know that's impossible? He said, because we've never done it. You understand? Now hear me. He grew that $13 million company in the short period of 2.5 years that I was with him to over $58 million a year in revenue by changing that number. Hear that. By changing that number. That's all he had to do. Now, if Fred had been there, he would have then changed all the other numbers because the business would have spoken to him in a way it had never spoken to him before. Nobody ever dared to say, what if the number were this instead of that? He never put it into question. Now hear me, he's now got a great company that's doing about $60 million a year, but he's still back to 2%. Why? because he's terrified of creating a $200 million a year company. Hear this. Terrified of creating a 200 million because it's so much bigger than what he's accustomed to doing. He can't rock it. If Fred were involved in that process with his system, it would suddenly begin to speak to him, and he'd suddenly understand that just bats indeed, but it's significantly bigger than anything he ever imagined it would be. How exciting is that?
Wow.
Hear me. How
Wow.
exciting is that?
Excellent.
I have a question for Fred. It's real quick. Regarding cash flow, I work for a very, very small company who has a very large client as their primary source of income. And the payment terms used to be 30 days, and now the trend seems to go to 60. For a very small company, would your program assist the cash flow problem that we are facing right now? 60 days is killing us.
Yeah, well, it would help you manage that, because what we ask people to do is, again, look forward. What is going to happen? Like Michael said, not what has happened, but what is going to happen. And if things change, if you went from 30 days, 45 days, 60 days, 75, 90, whatever the number is, you need to understand what that means in terms of cash, because it's all about timing. It sounds like the revenue hasn't changed. It's just the timing of when you collect that has changed. And depending on the gap between where the terms changed and your cash flow at that point, and then the new reality, it's that gap that you have to manage, because it's the delay of that cash. The problem is, and I know, Karen, the problem is you have to manage the other side of the business, the disbursement side, not the receipt side. In your particular case, the receipt side's pretty well defined. And now the rules have changed. And if you don't change the disbursement side, that expense side, the operating structure, you're going to suffer through that. And hopefully you'll gain enough cash on the back end. It just depends on how long that time frame is. And that's a very dangerous situation to not know what that really means. And I'm sure you're living that.
Let me answer that also in a little bit of different way. In our business, eMyth, we started our business by charging a monthly fee for business development services. And we're working with the smallest of the small. And you've got to understand, it would like saying to a small business owner, you got to hire a consultant. Well, you understand small business owners don't hire consultants. Consultants, when we started, way back then in 1977, would charge about $800 a day. Our fee was $800 a month. And we would invoice our clients that $800. And we would experience, guess what? Slow pay. They're paying for something they don't understand, and they get to pay it when they're ready to. Well, one of our salespersons comes in one day and she says, Michael, have you ever thought of charging them in advance of the month? I said, you can do that? And she said, sure you can, automatic debit. I said, I never heard of it. What's that? She says, you automatically debit their credit card. And you're getting paid in advance. So I turned around to our accountant and I said, start doing that next month. We started doing that and we eliminated accounts receivable. Eliminated accounts receivable. From slow pay to pay on time every time. Think about it. One simple decision to alter the shape of a company, boom, just like that. What is that simple decision you get to make? You understand you're living with a problem that's been created based upon a mindset that exists within your company. Alter that mindset and everything will follow with it. The beauty of this, what Fred does, what his system does, it enables you to alter your mindset. You got it? We're flooded by mindsets, every single one of us, and we believe we've got to live with it. We don't. That's the good news.
Yeah, and again, it's about clarity. What does that mean? What do we have to change? And if we can't see what next month or 6 months or next year looks like, then we have no idea what we need to do. If we don't know where this is headed, how are we going to address it? You have to have clarity about where you're going. And in that case, we're talking about very, very large companies
Right.
that are just going to give you the finger when you tell them, I'm going to charge you credit card.
Right.
So to speak.
So to speak, the corporate finger.
All right. Any other questions? If not, let us give Michael and Fred a big hand.
Thank you. Thank you. Glad to be with you.